Hey, what's going on? Chris here. So we're gonna be back at it again, make some money. So just as like a follow up, let's see, I'll put it on this one. So just as like full transparency, we made 73% on the year. So there was a period where the chop got me. It got me pretty good. I mean, I had to claw all that back and then some. So now, we could have been over 100% on the year, but that chop slammed me. So now it's included in the analysis to see if we're in the chop. And just following the system of just when we're in the chop or when we're beginning kind of a position, we go wide trailing stop, low size. Because like with the edge I got from timing solutions, it's good. But when it goes in the chop, it's just it's a lot harder, and I have to not go as fast. The speed is not the same. It doesn't like match. It doesn't like timing solutions can't detect speed, so we have to like be really aware of that. So, but it is a big celebration to get 73%, 73.8% on the year, just because that's hard to do, and we did that in I think 3 months because like on the month we're at 28%. So that means like within the last 3 months it's roughly 80%. So we made 80% in 3 months. So that's a good deal. And we're just going to continue that average per month. So we're roughly averaging 30% per month. So that makes sense why it would be almost 75% for the year. And that's why I say 3 months. So really exciting. So just got this whole embarrassing thing now is no longer, the idea is like it's no longer going to happen. It's right in my front of my face. And my goal is just to make that line straight up to the right as much as possible, because I don't know, it's just an embarrassing kind of event. And now it's part of my analysis to make sure that doesn't happen again. So we're going to start at the top again. We're going to look at did we incur any black swan events? And then as far as like the central bank and government spending, we'll look at any kind of events happening this week. And then we don't expect any government spending to pass anytime soon, like specifically stimulus. As far as like QE, I don't think we have to be worried about QE having an impact on anything. It's mostly whenever the Fed makes purchases and it expands the balance sheet. So maybe we'll say government stimulus, and then we say central bank balance sheet. I think the central bank expanding their balance sheet is like a signal for risk on behavior. So that's kind of where we would really take note, because then we can be aggressive when the Fed is aggressive, because they're basically using the whole power of the collective tax dollars to prop up a market, and so in doing so, it's free money. So we got Fed Powell speaking Monday, 10 a.m. And then we got Williams speaking Tuesday. And then Powell speaks again Wednesday. Oil inventories Wednesday. And then we got some PMI unemployment claims Thursday. So some possibly big moves. And in oil, we were expecting some kind of crash coming on the 22nd. So like 22nd, 23rd, we're looking for some kind of convex event that we can lean into, and I'm going to show you what we're looking to buy. But and then we got Waller speaking on Friday and Williams speaking on Friday. But and then revised inflation expectations. So that's going to be interesting. So that's kind of just what's in the calendar today. As far as like learning which one's like the key event that the market's going to move, I'm still like learning that. But for right now, it's okay just to list what I see. And then as far as like government stimulus, I don't see any like big news for government stimulus. And then in the central bank expanding their balance sheet or reducing their balance sheet, as far as from what I've seen, we can take a look at this this chart I made for specifically that. It's called so I called it rebalancing. But whenever I'm tracking the Fed balance sheet and also the percentage of yield curve inversion, and that's kind of like my top and bottom signal. And right now, I think the Fed's not adding to the balance sheet, and as far as I know, they're not subtracting a whole lot. I don't know. I think they reduce purchases, but they're not like taking stuff off. I think that they just stop buying. So we're kind of going flat here on the Fed balance sheet. So there's no like real risk on behavior. The interest rates are hiked up, so it's signaling almost the opposite. So that's kind of just prepping our bias. And then as far as like black swan events, like did anything happen? So Evergrande halted pending inside information announcement. Okay, Evergrande services suspend trading in Hong Kong. So that's interesting. So looks like Ukrainian people are kind of panicking. I mean that's kind of like obvious. Russia's targeting the shipments, so they're really going into the siege mode. So like they're really trying to ostracize Russia to like do an economic war. So it doesn't look like anything that's like like a black swan has happened. We'll go over to the guy that's named actually Black Swan. So he's talking about fertilizer prices. Missile strike from earlier tonight in Kiev. Oh wow, they got a car. Oh no, whatever they did, they got something. There was some like boards. Some kind of something crazy. Missile strike. Scary. So it looks like the inflation with the fertilizer prices, like it's just digging in. Like it's so weird. Like these like things, there's no shortage of supply. It's just these supply constraints. Supply constraints. The factors are like the war or China and them getting sick or just I don't know trying to sabotage something. I don't know. Increasing their prices or maybe the ports or people are getting sick. I don't understand that. Or not enough workers at the ports, not enough workers for drivers, or not enough shipping containers or ships to ship the shipping containers. But like it just seems like a big cluster of just problem, and it's no longer optimal, and it's now just like fragile. And we need more of like kind of like what Lynn Alden was saying, kind of like a resistant economy, like something that's can take a lot of heat versus something that's like optimized but fragile, that's really dependent on its like offshore partners. But maybe that security risk will disappear, or that inefficiency for this current environment, because it doesn't seem like it's going away anytime soon. We can only hope that it goes away soon. So as far as like the bond market, we'll look at the credit spreads. Credit spreads are like the most optimistic. Credit spreads are also like the one that's like more of like a live feed of just what's going on. But we're elevated. We're at 1.6. We're no longer at 2.1. This was Friday, so maybe things are getting better with the overall like debt market, but only one could guess. And then from there we'll go to yield curve. So with the yield curve, we still see some kind of inversion on the 7 and 10 and the 20 and 30. That usually, you want, as far as the bond market, you want it just up and to the right. Just kind of like how you want my my profit to look like. You want it up and to the right. We don't want any like inversion. Like if I start inverting on the tail end, I'm losing money. So we could say that if the bond market and the tail end is inverting down, it's losing money. We could basically say that. It's like a really good analogy. So bond market, the yield curve is not looking great. It's like sick. But the credit spreads are like, it's not super sick right now. Like we're like stable. We're like sickly stable. If I were to put it something like that. And then the move index, if we take a look at the move index, so we'll just make this a solo window, and we get rid of that, and we go to the move index. So we're at support, and the market hasn't opened yet. But for the sickness to go away, we need this to abate and go below zero and close the week below zero. But my guess is that it's going to bounce, and it's going to just consolidate above 0.13. It's going to reclaim 0.13 and above this purple line. That's my guess. We'll see. It hasn't happened yet. And we need to see the weekly close. The dollar, let's take a look at just how it is on the weekly. I don't think we need to switch to a different time frame, but it's at support. So like right now, it's just kind of ranging. And if we were to put a smaller range on it, we could. I already did on the H4 right here. So we're just going to open it up. Yep, and everything's in place. So right now it's above the 0.382, and it's in this looking like a symmetrical triangle, and it's looking pretty healthy. Once it gets above, let's say, I don't know, like the 0.246, and then also we can put in another level here, like the 0.13. It's this one. We'll put in these two. So we get above the 0.13 and above the 2.46. It'll be like really good scaling opportunities to, because this is looking like a double bottom. We get some kind of bull flag here, and then we break out, and then I guess we do another bull flag, and then we do another bull flag. But yeah, that would be the idea of how it would happen. So a play on longing the dollar would be a good deal, but I don't know. According to the COT report, is looking like they're not super excited about the dollar. So maybe not this week. Maybe like this week, it needs like another week to go by in order to get excited about the dollar. Because if we take a look at the calendar, looks like we got one more week before the month closes. And I think both oil and the dollar are waiting to see the end of that close. And if we're also counting in the dollar, the market is also waiting for the month to close and just how we close, because I think it's going to direct just what the rest of the year looks like. Are we inflationary or are we deflationary? Like, is the Fed acting correct or are they incorrect? Is the bond market correct or are they incorrect? So like there's a lot of just, and then there's another one: is gold correct or is it incorrect? So like I saw that gold is choppy. It's not leaning one way or the other. I see that it's chopping, and we'll go over that. That'll be next. But yeah, we'll go over the the we'll call it something on the side. It'll be after all this. We'll put it down here. We'll call it extracurricular. And things that I think would be interesting to look at would be lumber to gold ratio. So it's a little hard to develop some kind of system to like assign some kind of like significance, and I think I've found something that I would like to test. So lumber to gold ratio, the sp500 versus gold, and then another one would be value versus growth. That's value, growth, IWD versus IWF. So those are like some, and then we're also going to look at so with the bond, with the yield curve, we want to also look at the 10 and 2 inversion. So this is the 20 and 30. We need to kind of go back to the weekly. So it definitely looks like it's getting close to inversion, or it is at inversion. So here's 0. So technically it's inverted. Let's put the 0 line. So there we go. It's inverted. And then the 10 and 2. And we got the blue line there. We could also put a fib on this range. It's telling us we got a range here. We could put a fib. And we could tell if it's at support or resistance. So there is a universal fib we got here. We can just move it to the side. There we go. And then now we got our, this current fib is not set up correctly. It's hooked on a different anchor point. There we go. So we're coming into a fake out zone, the 0.13. So we either close the week above it, this is the weekly, or we kind of consolidate. So this does look like it closed the week above and it hasn't consolidated yet, but it's really aggressive of reaching to 0. And once it reaches 0, it's basically inverted. It's basically said, we see a recession happening within the next couple of years. So that's getting kind of scary, just how close it is. So that's something we got to keep our eye on for the 10 and 2 inversion, the canary in the coal mine. So I'm going to put that in here. Okay. So then now we got to move on to the cycles. So we look, put it, the sp500 in. So this is from the Yahoo news feed, or the Yahoo data feed, GSPC. So it's going to download the data. But while we wait for that, this wasn't easy. It was pretty difficult, but I was excited that it worked out. And hopefully there's a couple more plays where I could easily make 300% this year. One is on oil, and then another one is on the short, on the sp500, depending on the size I do, and the skill that I am able to demonstrate all the way to the middle of the year, and then coming out into Q4 on the bull run, could easily hit over 300%. And then if Bitcoin also goes on a bull run, that will also add a multiplier, because I get paid in Bitcoin, and right now I've collected almost a quarter of a Bitcoin. So the goal is to get to 0.5 Bitcoin by the next week, or by the end of the month maybe, and then we'll see where we go from there. And then maybe by middle of the year, maybe by the middle of the year we get half a Bitcoin, like 3/4 of the year we get 3/4 of a Bitcoin, and maybe by the end of the year I get a full Bitcoin. That would be like the ultimate goal. And I don't know, it would be pretty cool to have a whole Bitcoin. I've never had that, and it does seem very like interesting as like a novelty to have like a whole Bitcoin. And for some, it's like very stupid. It is like a beta play. I'm basically signaling as a beta play that I'm gonna hold it for like a set, like what is that, like 50 years at least. A pentecade. Okay. So we're loading up the cycles. So we could go ahead and look at our moving averages where they're at, the average daily range and the macro range. So while the cycles load. So this is the weekly resistance at the breaker here at 4529.6. We did just cross up on the MACD 310.16. So any cross down will be met with a lot of force. On the daily, we're just above the 72 moving average as like testing for support. We could launch up into the extension. That's why my sell order is like the smallest size I could ever do. We did have a breakdown on the M15, which is not really a good signal for short, but I just wanted to have something just in case. The best signals for like an H1 or H4 market structure break. But right now, based on like the timing solutions, and we're at resistance, we're resistance is the last week high. I feel comfortable with making a super small position, and my trailing stop is above the all-time high. It's a daily trailing stop, 9-period, 4 multiple ATR trailing stop. And until it's confirmed that the lower high is in, then I will not bring it down. Until it's confirmed, and once it's confirmed, I'll bring it down. I'll tighten it down to like an H4. Once I have, or I guess like a H1. Once the trailing stop has moved far enough to where it's like break even, that's when I'll have the position at break even. But until then, I can't assume that the high or low is in yet. So going to the time solutions, we're gonna zoom in. Okay, and then we're gonna go ahead and add this math cycles. So we got the decennial annual. So I think that's where it takes 10 years in the first year of every 10 years, and it makes a math cycle. So with a decade, like a decimal, it takes all the data from the 10 years and then it finds like patterns within the decades. With this one, it just takes the first year of every decade and then it combines them. So that's the decennial. And so I take the decennial, I take the annual, I take the decimal, and then the 4-year. And I just look for the confluences or the accordance, the agreement. So this one's the annual. Oh no, this is the decimal. Last one. Third one's the decimal. Oh shoot. We're gonna get an extra one. Okay. So it looks like we're at a concave event, so that's kind of why I went ahead, since we're at resistance, since we bounced off the daily resistance block, we didn't do a stop hunt, but it's just straight up got rejected. I went ahead and, it could catch an extension to the upside. Maybe there's bullish news or whatever, and then we get an extension higher, a squeeze to the upside. But as far as, like, for me, I'm satisfied with holding underwater with a short. But this gives me more confidence to hold the short at this concave event. And it's just a matter of the market structure agreeing with the mass cycle. And of course, the market structure semi-agreed already on the M15. So if we go to the, I'm trying to get a little bit ahead, but the M15 already broke. We have a breaker. My real ones that I look for are the H1 and the H4, and that's all the way down here underneath this this high. So, and it would be underneath what that is. What is that? Maybe the 200. So that's the sp500. And then as far as like the fibs, we're right at the point 38.2 on the 52-week range. So we could hold here and then resume back up, and that's where we could get a fake out. But once we get into this average higher ADR in the context, we should be overextended. We're already overextended on the RSI. We took a look at the RSI. We're pretty high on the H4 and the H1, so I feel confident already with that low size right now until we get an H1 market structure break. But right now, I'm aware that I could get squeezed all the way up here, but I feel okay and confident that that's acceptable with the smallest size. Once we get an H1 market structure break, it could be all the way up here. Then that will offset any pain that this will be causing. So that's kind of just my mindset. Like I'm at this point, I don't care anymore. Like I'm ready, and even if I have to hold underwater. But it does look like it can go either way, and it looks like it's holding a support until it says otherwise. But it looks like, you know, we're right at the last week high, and we're at support, but it's like right near resistance. So that's kind of just, we're in between, I guess, support and resistance. We did get a daily breaker, so that was significant. But the thing is, we got what is it called? A naked pivot down here. Here, it prevented it from touching it. So any kind of retracement back in, because it didn't retest this daily breaker, I expect it to close this gap and expect it to close, retest down here. So we'll see. Anything can happen. But if it gets even more extended, I believe that we'll have even a harder crash down here. That's kind of where I'm targeting. And this is like one of 3 targets to the downside. And if I could get another position up here, that would be fantastic. And then I would just take this fib from the 52-week range, and then I would just stack in huge position right here, and for every part of the fib, just because then there's like safety in the break-even average, and anytime that I feel like I'm kind of wrong, I could always trim it. I can trim it and then wait for the rejection for the next time, and then as it gets returns, I could get that position back. But right now I'm trying to like develop some kind of big position. Maybe it's down here, and then I will have to accept that this is probably as high as price will go, and then it'll be here, and then here, and then we'll see what happens when it goes into here. Maybe it'll come back, and then maybe it'll get rejected here at the 61.8. But that would be kind of just how I would expect price to behave with this downtrend, and with the weekly bearish order block here highlighted in lime green, or like a sofa green. It looks like there's a lot of resistance right here, right at the 200-day and the 72 or the 50. So that's like the sp500, and we looked at the RSI. So let's look at the trend efficiency and the noise. So the trend efficiency, if we look at both the macro trend and then the daily, right now we're set up for a good reversal. because that's kind of, we want to enter short once we get extended, and it traps some bulls because we're in a macro range. We're playing the range. So anytime we're in this like extension, we want to look for a reversal because we're just ranging. And how you can tell we're ranging is when, if you were to make a moving average channel, we're caught exactly in the middle of it. And we're also like not trending efficiently on the Kaufman efficiency ratio. We're on the gray side, so it's just noise. So I'm just playing the range, and I have my range from the 52-week range low and high, and I'm just trying to position in short where you would naturally position in short, and then long where you would position in long. Obviously, to make that decision, we have to have some kind of significant market structure break. And with this cycle, I'm able to bend the rules a little bit to where I'm a little early because of a higher confidence. Like it's not a good habit because it could be wrong, but in my mind, I'm ready. I'm thinking it's ready. It's at resistance. If I get an extension, I've already went in a small position. So we're done with this COT report. Mostly long the New Zealand dollar and British pound. I don't know if they got some kind of specific event. So we looked at pretty much everything. Now we're going to look at oil. So fertilizer and oil and commodities look like they're going to continue higher because of all the context. So as that loads, with the sp500, we went through where the context of the moving average is. It's above the 72, it's above the 200, and I haven't put the 10 EMA on there, but some people like doing that. But I don't think the moving averages provide like a huge edge. I think maybe the bigger time frame ones do. And it's to discern if you're trending or not. And then the idea is you want to figure out when you're trending out of the breakout, out of the range. And then we got the range bound kind of micro, the average daily range, and then the macro. We got an intraday one, and then we got a macro one. So I like to do the 52-week range, the weekly high and low, and then if you want to do like intraday stuff, the daily high and low, and then I like to do a 2-year range or a 5-year range depending on how big the range is. And then the RSI, we're obviously overbought, almost into the daily for the sp500. The trend efficiency right now, we're on the daily. We had 1 day of efficient trend, and right now it looks like it doesn't look like it's the open might not be efficient. We'll see, but it does look like it's ripe for how fast it moved, how much it moved for a reversal, and that's determined by the market structure break. Right now we had an M15. It's not super reliable. I went ahead and took it anyway. I like the smallest position that I can take. The one that I would really take on a bigger position is an H1 breaker, and then also a retest on it and resumption down. And the H4 is also another like heavy bias. I usually, if I'm new to the instrument and I don't have a whole lot of context, even the math cycles are weird, I only do weekly and H4 bias. But that's kind of just to give you some context. But with the timing solutions, I'm going aggressive. So we're going to get this crude oil in there. I thought I already did. Maybe it was loaded. I don't know. Maybe I can like cancel. I don't know. It just like disappeared. Maybe like I disrupted that. and like I just went ahead and grabbed the world globe. My bad. I think that's what happened. Okay, so we're loading again. So this is the next big trade that I see. Now that I have like a new computer, I bought a Meta computer, and I'm gonna be upgrading the RAM from 16 gigabytes from 8 gigabyte dual channel to 32 to like 16 dual channel, so it'd be 32 gigabytes, and then from an i3 10100F to an i5 10400F. I'm expecting that I can trade on my other leveraged account where that has access to natural gas, so I'm excited for that. And also, I think it has like access to like the Canada market. I don't know, but I've been wanting to have access to maybe like the Russell futures or something like that. But I still haven't found a broker that will do that with MT4. That would be nice, because now I have access to some kind of cool investing tool, and if I can get like a handle on just the small caps, because this investing tool uses like factor investing. It's a keto finance, and it helps you do a min-vol optimization, rebalance, and it just makes it everything equal weight. And I would like to get a handle to be able to trade in and out on that kind of portfolio, or when to switch to min-vol on a market structure break. But shoot, what in the world? This is not oil. Like, did I really like zone out? That's pretty bad. Like, it's getting late for me. That's like really bad. This is not oil. Oh my gosh, this is terrible. Okay. I got really involved about what I was talking about, my computer, and then wanting to trade these other markets. Okay. Now we're on track, and then we're going to add the cycles, the math cycles. Wow, that was just trippy weird. Maybe it was I don't know, like when I looked at the side and the left, it looked like it was the wrong instrument. Okay, well anyways, we're here. Doesn't matter anymore. Okay. So we're adding the decennial, the annual, decimal. So we're waiting for that concave event, and we're looking to see if that's possibly. So this is not meant to be taken literally, but I do take the curves as some kind of signal. And sometimes not all of them agree, but I look for the ones that have like maybe 3 out of the 4 or 2 of the 4 agree. In this case, it's 3 of the 4. And we're looking for this convex point right here. It should happen right after probably the crude inventory level. And we're looking to see some kind of bottoming. And my guess is, so I drew some kind of, that's the momentum. I drew, if we go to oil, we're on the H4, ready, we're on the weekly. Go to the H4. Here on the range. And I drew the range that it gave me from the bottom here to the top here. And then I drew in just kind of like where I saw some naked pivots on smaller time frames. I think those are like H1s. And it looks like right here there's like a naked pivot. So around like 89, 71 point, 73.1. Oh my god, 89.731. Jeez, sounds pretty bad. But yeah, so we're expecting price to go possibly into this buy zone in this what is it called, rejection, a fake out zone. We'll buy here, and then we the thesis is that that will be the low of that convex point on timing solutions. The thesis is that this low, this convex, is the low for WTI crude down at 89.6. And then the goal is to reclaim inside this symmetrical triangle and then make higher lows. You would stack in maybe again at this monthly open, again maybe at the 0.764. Maybe we can add in the 0.87. We'll stack in at the 0.87, the 0.764, and then see if we can get above the 0.618. And by the end of the month, that is the goal. If we can make that kind of position building, then we are sitting pretty for whenever we break out. Because whenever we break out, we can add a huge size, and then we can catch a huge run. Because we bought the rumor, and then we're prepared for a super big position if we wanted to take it. And then we can have it at break-even average. Would probably, so once we build in this position, the break-even average will be here. Once we get this big position here, break-even average will be at the 0.5. That's where we would like it to be. A little bit under the 0.5. So then we know it's, like, for the most part, protected. We have a trailing stop on maybe the H1 or the H4. You know, probably I would like the H1 once we've broken out and have enough to where we can trim off the size if we need to and have the break-even average under the 0.5. And then we target whatever all the way up here, 139.745, and then we push 1/3 long past that for a random walk. So that's the plan. So that's going to be really exciting because that's roughly, if we were to measure all the way from where we would buy to where we would sell 2/3 of the position, it's 55.86%. And once we start building a super big position, it's going to be really big. It's going to be really massive, the amount of profit. And then for it to like go past that for a random walk, we're going to have a trailing stop. I don't know, we're going to probably have to split it up into 1/3, 2/3, like a fast and slow. And we're going to see how that performs. But that's like a really exciting play that I'm excited for. And not only the short side of the market, but this long side of the oil market. We're going to make a ton of money. Like that's the plan. And we're going to just really manage the risk, be really methodical as far as like positioning and the break-even average, making sure it's at the right spot, not getting too aggressive, not getting too hasty, not making the stop loss too small to where it gets hit. And we want to just be methodical about it. So that's kind of just the plan. And as far as like the noise, we're going to take a look. So it looks like it's noisy. It's noisy, it's choppy. We're inside the daily kind of cloud. But I expect it to be choppy. I would like to see an extension to the downside. Here at the 0.618, I think this is a 52-week range. And it just happens to be where we would buy. 0.89 or 89.731. It's right above the 0.618. So that's kind of just the buy zone we would like, and a reclaim of the 0.5 on the 52-week range fib, and then if, the scaling of that symmetrical triangle. So that's kind of just what we're looking for. It might not come back there, but we would love it to come back there. But it does look choppy, and we're just gonna not touch it until we kind of have some kind of oversold expectation met. Like we want the RSI or some kind of like ADR range to be extended for us to get interested, because right now it's just too wild and it's too choppy for us to get like some kind of convicted signal. We want something that will give us conviction, and that's extension, where the bulls are extended and there's a trap, or the bears, where the bears are extended and it's a trap. So that's kind of just what I would say on that. But it's really exciting just to like plan this out, and we're gonna see by the end of this month if it's true that it'll go higher, and the same as of the stock market. We'll see by the end of the month where it closes if we'll get a monthly market structure break. So on the S&P 500, we got a monthly order block here. So let's get rid of some distractions so you can like pay attention to the monthly order block. So this will go to the monthly here. So then it's like really honed in. So that's the monthly order block. We're getting near the end of the month, and they've already announced like their plan for the rate hikes. We already have just an idea of what the bond market's thinking and what the dollar is doing. And we're going to see by the end of this month if it closes beneath. If it closes beneath, it's a market structure break. Now on the NASDAQ, it's already closed a monthly market structure break. So that's significant because, like, you know, I don't know. I've never seen a monthly market structure break. And if the NASDAQ's already got it, there's a lot of resistance. There's a lot of bears hanging out right here. And I don't think they're going to want to sell and give it up that easy. So for the S&P 500, like, basically what I would say is once this gets a market structure break to the downside, it's a nail in the coffin, and we're going to head down to this market imbalance. Or the one that's like 3,400 maybe. In my mind, that's what it would be. And it's totally a possibility. I don't write it off. I think it's totally a possibility that it can happen this year, and it makes sense with the intraday volatility for an election year that it's possible. And we have, like, you know, geopolitical risks, and you just don't know what can happen. And there's people out there that are at different sides, but you know, as far as like having a balanced mind, like, I don't want to be too optimistic, but at the same time, you know, recognize that these risks are still present. Once this weekly market structure break happens, this weekly order block, and then it happens to the upside, I'll become more bullish. But that hasn't happened yet, and because of that, you can't take away the fact that the bears are right there, and they're ready to possibly push it down, either to the lows or past the lows. Once we have that monthly breaker, we're going to be range bound. That's going to be the high for a while, for at least until the end of the year. So my plan is to monetize not only the way down, but the way back up. Once the Fed says, okay, we've had enough, we something's happened, and we need to expand our balance sheet. I'll be happy to buy, take risk when they take risk. It just totally makes sense to take risk when they take risk. But because that's basically free money. But yeah, we'll see kind of where the account is from there, and we'll see what opens up. Maybe Bitcoin, the trade on Bitcoin will open up, and we'll be excited to trade that to the upside. But until that time comes, I don't think it's anytime soon. I think this has to flush out this month, and then we can see where Bitcoin's at, where oil's at, where the market's at. For the most part, it's just figuring out where the market's at as the center. That's kind of where I see. And then oil's going to be a crazy trade. I'm going to be excited about it. And the Euro US dollar is going to be a crazy trade too. I think that's going to be something exciting to possibly short. Right now, this week, it doesn't look like the COT report is signaling that anything's crazy is going to happen. So we're going to wait a week before we get really interested. But I'm thinking maybe we'll get like a small position. I haven't decided yet, because right now I'm just trading the markets, the S&P 500, and it's correlated with the dollar. So that's kind of just my my spiel of 50 minutes of just how I see what's going on in the sp500, where I would sell, how I would do it, what the mass cycles are saying, what the bond market's saying, and what the dollar is saying, and then oil, what the cycles are saying, and how we would position in for the long trade, at what time we would expect certain things to happen, and then for Bitcoin, what milestones we would need to hit before making a decision to go long. So that's pretty much it. I don't think I'm missing anything. I do want to be able to see if I can trade more Forex pairs. We'll see how that goes. Talk soon.